Hey, what's going on, guys? Welcome back to Way Up Trading, where we dive deep into the world of trading options and doing technical analysis. If you're new here, my name is Will Homer, and I started this channel to go over and share some knowledge with fellow traders who are looking to take their skills to the next level. We cover everything from beginner level concepts and to some advanced trading techniques. The goal of this channel is to have your outcome become more income for 2023. So if you like this type of content, be sure to smash that like button, hit the subscribe button, and don't forget to hit the notification bell so you don't miss any of our future videos going forward. So with that being said, let's hop right into it. All right, and so to get started, I'm going to go and pull up the SPY on the 2-hour chart just to get an idea of how we've been moving over the last few days and into what the type of action that we saw today that led to a huge sell-off. We're going to be going over a couple of indicators, taking a look at what I expect for the next few days coming out after our bounce at the end of the day. We're also going to be taking a look at some of the major earnings reports that took place that had an effect on the rebound in after hours on the SPY, such as what took place with Microsoft, also with Google, who reported earnings today and pretty much had a nice rebound in the SPY. So we'll take a look into that as well. All right, from a technical standpoint, you can take a look here. I have the 2-hour chart pulled up. You can see that after the last couple of days, we've actually fallen out, as we mentioned before. We've had a massive rising wedge has been forming ever since we've had the touch of 379 and have been playing the up and down side ever since that time frame. We rode this all the way back up, played the top end, pretty much maxed out somewhere around the 416 mark, just a little below 416, and have since traded sideways and fell out of that uptrend that we've been forming since roughly about the beginning of March. Now we are actually playing the volume profile, traded sideways on that going into such a huge data week such as this one. We have CPI coming up on Friday, as well as the jobs data. The real estate market also showing up on the list, not to mention huge earnings. Roughly about 40% of the S&P 500 had its earnings reports that showed up this week. So a lot of fear going into the market, a lot of things that played against it, pushing things down, holding things stagnant, allowing shorts to come in and pile this thing right back down to levels of support. Not to mention, obviously, we had a huge run up from the crossing of the $400 mark upwards, leaving a huge number of gaps between the 406, 407 mark, and also 408. Those gaps were deemed most likely going to be filled at some point in time. So before we make our next leg up, which I am still bullish on the market, it is most likely something to expect that we go ahead and fill those downside gaps. Once we lost the support, that major support roughly around 411, we had our crosses, pretty much knocked this whole thing back down roughly about a good 2%. Since yesterday's highs of 413. I have the 15-minute pulled up just to get a clear picture of how this thing has moved throughout the day. SPY basically had its crossovers in pre-market and post-market yesterday. You can see the 1348 as well as the 13 EMA, the 48 EMA, 200 EMA, 9 EMA, and 21 EMA all had their crosses in pre-market as well as in after hours yesterday. Huge red flag, obviously, for the downside to play out. You see I have this gray line, a thicker line here is going to be your smooth moving average for the 15-minute period, which basically is a compilation of 200 EMAs throughout several different time frames. I like to keep this here in order to get an idea of where the trend is either been bullish or bearish. Usually if we're underneath this line, that means that we are in a situation where we're most likely going to be in a bearish setup. So that means puts would be in play for anything that we look into for that day. There are times you can play the opposite side, but it is risky to play against the trend. So I would advise against it if it's something that you try to do. If you're in that kind of a play, you play very short in and out, and don't try to go for a long haul. Obviously, we had this cross here reaching down into the open. We had a pop up, obviously because of increased volume at the opening, which pushed us up to about the 411, 412 mark, just under 412 before being rejected, pushing us back down, and nothing but selling pressure came in. Now, if you take a look at the volume profile, volume actually started to decrease as we got lower and lower throughout this time frame, but we did have some issues that were showing up in the banking sector with the FRC sell-off that pretty much contributed to the continued sell-off of the SPY as well as the overall market. So once we lost that 410 level, 410.88 was my T1 target. We lost that. 21 EMA continued to barrel this thing down. We had a couple opportunities to pop up on low volume, as you can see here. Low green on low buying pressure pushed us back upward after hitting our optimal price range of 409, which I expected to have a heavier bounce, but it didn't seem to play out much. We were rejected fully. This orange line I also have here is the 400 moving average, which is also another moving average I like to keep on all my charts. Gives us an idea of whether or not we'll find resistance or support before coming back down, or potentially gaining some support over or breaking above it to see upside movement. I use this and it coincides with the idea of the 200 smooth moving average. I usually like to see some type of consolidation in between, but if we are below it, it further confirms bearish movement. If we are above it, it further confirms bullish movement. So in this case, you can see we were instantly rejected here at the 21 EMA and the 400 moving average, where was the convergence here. Once we saw that, that was a great opportunity to enter in your put positions for the long haul downside move. I entered in here roughly at about 410 and was able to actually put in some 404 puts. They played out well at first. We did have a little pop that put me into a situation where I had to consider having a dollar cost average situation. But then when I noticed that we did break above 409, it was game on, and we played all the way to the downside, all the way to about 406, roughly right by the end of the day. And things played out really well for the 0 DTEs, as well as the next day, the 425 put positions that I had for 404 strikes. So once again, we did miss our support here at 409. That didn't hold. The 9 EMA continued to push us all the way down, and we literally played the downside all the way until close, landing right here on this volume shelf at 406.16, right on VPVR. If you can see right here on the right-hand side, that pretty much gave us our final support before earnings took place today, which is pretty much what was been holding the market up. The earnings, the big data, things like that have caused the market to be in a standstill position before a possible turnaround. Not everything was a win today. I expected a little bit more from QQQ this morning. I did take a little bit of a risk on this one, playing 0 DTEs as well as tomorrow's date for calls to 316, but was a little bit overzealous on how things were to play out based upon what I was seeing on the charts, and also expecting there to be great earnings in advance and in anticipation for it. I played the QQQs to the upside, got mauled, roughly lost about 30% on those plays, and kind of soured me for the morning time. But things wound up working out and playing themselves out to the positive side later on in the day on other plays that we had in mind, such as SPY and PDD. But you can see it was just a waterfall all day long on the QQQ. I kind of got bull trapped right about at 11 o'clock this morning, just before 11 o'clock or so. Bull trapped right around here, roughly about the 313 mark is where I entered my call position. Not paying attention. When you don't pay attention to the specifics on the chart and try to play details, you tend to get wrecked. And that's exactly what happened to me. I do still make mistakes here and there, but I do want to also use them because there are teachable moments, and there's a lot that you can learn from the mistakes that are made so you don't make them a second time around. So with that being said, you can see I went ahead and entered a call position for 316 tomorrow, roughly around the 340, 330 mark or so. We had this huge candle, that was a little bit of a change in behavior before things started to take the worst side. I did get a little bit of a pop here, was up roughly about 10% or so before things just waterfalled and cascaded all the way down. I wound up exiting my position. I was stopped out roughly about minus 30% on that. In terms of after hours, you can see that we had a turnaround right here where this order block is actually placed. Like I mentioned before, the order blocks are places of liquidity. This is the 5-minute chart we're taking a look at here. Order block, this is what I use by Sonar Lab. And this one here just shows that there was orders placed after the price barrel below it, which is roughly, we had a close of about 309.99. And we right now at aftermarket, we're roughly almost 1% up, 312.53. So this is based upon the movement again by the huge earnings beats that we have from Google and Microsoft. Now, one of the biggest earnings reports right now that we have for the effect on the market after hours is Microsoft. Huge beat this afternoon. Despite cloud struggle, the tech giant beat on revenue and EPS. Taking a look here at some of the stats. Beat on revenue, 52.9 billion versus the 51.1 billion that was expected. Beat on EPS as well. Earnings per share, 2.45 versus the 2.23 that was expected. You see a big indicator of the success right now is the AI inclusion into future endeavors. I'd expect them to start to give us some more details. We haven't had the earnings call just yet, but I'm looking more hopefully to get some details on whether or not they should be going into the AI space more in depth, being that right now that is all the rage. Okay, just pulling up the charts here, just taking a look at Google and Microsoft after hours. You can see the huge influx of volume and buying pressure that came in after hours, came down, bounced right off the 400 moving average, popped right back up after the announcement of the beat on earnings. This is on Microsoft once again, all the way into this first order block, knocking it back down, obviously. This is roughly about a 5% move after hours, which is huge for a mega cap stock like Microsoft. So to see this kind of movement is beautiful. Next levels I actually have, if you're looking to get into some positions for tomorrow, or if you already have positions in place and maybe looking to take profit, I'd be looking for a hold roughly above the $288 mark, roughly 288.65. If this thing continues to push after hours, and you need to clear this order block area, which is roughly about the 290 to 292 mark. I have our optimal price is roughly about 293 and 14 cents. If things can continue to the upside, after that, if this thing can continue to pass through that 293.14 mark, you can easily start to hit aim towards the 297 to almost $300 range within a flash. So do pay attention if you're going to enter into the Microsoft play tomorrow, or if you already have a position, be sure to scale back, watch your risk. And congratulations if you got into it before the actual news. But overall, Microsoft, excellent company to have in your portfolio. Not too many worries on it at all. So you should be in a good space as long as the market can continue to hold up. As far as the technicals are concerned, I can see also that there's a smooth opportunity if you can go ahead and cross the volume profile here once again at roughly about the 289 mark, which in after hours you already have right now. You're at 289.25 with 5% up after hours. That you should have a smooth move all the way up to again about the 297, 298 mark. So do keep an eye on this thing closely. All right, as far as Google is concerned, Google also nice beat as we mentioned with the ad revenue picking up, as well as the introduction into AI. This is the alphabet chart, GOOGL, and same concept here. You got a huge move, roughly about 4% after hours. I have your next levels of support and resistance. You're sitting here right at an order block. You can see you wicked up roughly to about 109. Came back down, or finding support roughly about at the 108 mark. I can see this continuing on up to about 109 quite easily into tomorrow, as long as the market supports a move back up after such a sell-off today. But I'm pretty sure that the market's going to love that these big cap stocks, these mega cap stocks, have actually performed very well in the earnings situation, and most likely will carry the market back up tomorrow. So keep a lookout for that. Google positions that have next levels. If you can go ahead and hold 108 after hours, easily can hit 110 within about the next day or two, as long as the market is continuing to push forward. So if you got into that play as well, congratulations. You should print big on this one tomorrow. So with that being said, taking a look here, we're going to go back to the SPY, taking a look at next levels, resistance and support. Based upon this move today, and with what's happening on the market now with the mega caps actually moving forward. Still not completely out of the woods yet. As I mentioned before, we do have other huge earnings that are going to be coming out within the next couple of days, as well as big data. The earnings reports that come out with Google and Amazon, with Google and Microsoft, we should be, as long as you're holding the 407.10 range up into the pre-market and forward, and if we can break above 407.60, I can see our next level being pushes back upwards towards 409.50 within a couple of hours of the morning opening. Now, again, we do have other data and releases coming out tomorrow, which include you have before open tomorrow, you have Boeing, Humana, Hilton, Hess, Tech, ADP, General Dynamics, Thermo Fisher, Boston Scientific, Synovus. Now, they're not the major ones, but the big players that we're going to be looking for to make a huge effect on the market. Meta is going to be huge tomorrow afternoon, after hours. Teladoc also is something that's going to come into play there. We'll have to keep an eye on that. United Rentals, also one can have an effect in the market. So do pay close attention to those after hours, just to be on the safe side. If you are going to be playing, you may see some kind of sideways movement on the SPY due to those particular names being in play. Okay, as far as big data days this week, we have the GDP, which is going to be huge on Thursday morning at 8:30 prior to open. Also, the initial jobless claims should play also a big role on how the movement of stocks move on Thursday morning. So do pay attention to that, which should also lead to some sideways trading actions going on throughout the next day or two. Even though we have those big earnings that took place today, something to be aware of. Pending home sales at 10 a.m. on Thursday, and then the big one on Friday is going to be core PCE and CPI information on Friday morning, which is going to have a huge impact on how the economy moves and how the stocks and market moves as well. So do keep an eye on how things move on those days. Be careful with your trades. I typically don't like to trade on days like that, but there may be opportunities that we have to keep our eyes open for. Make sure you follow me on Twitter. Pay attention to what I post there. I do post a lot of my high quality plays there, just to keep you in contact with what I'm doing throughout the day. Eventually, we have a different location to start placing those trades. In the meantime, do follow me on Twitter. I'm very active down there, as you know, and we're going to start making some money together. As long as the outcome is income, that's what it's all about. So that pretty much wraps up the video for today. I want to know what you guys think. If that button down there is still red, please go ahead and click subscribe. Hit that like button. And also the notification bell so you can get more videos if you appreciate content like this. I want to get any comments, any questions, concerns. Please go ahead and hit the comment box at the bottom. We're going to be here every single day trying to grow our portfolios together, making the outcome income for 2023. Leave your comments, like, subscribe, and see you guys in the next video. Peace.